All right, so we are going to discuss how to find zones, and we are going to go back on one name, J&J, and we are going to show you proof of concept using the inside and up formation. And we're going to talk around the ideas and things that you can pull from this formation. Okay. So first of all, when we look for formations, we start at current price. We go down and to the side. Okay, down and to the side, not through candles. This is something that amateur supply and demand traders have no idea about. Go down, underneath, to the side. Work your way down. Boom. You can see the inside and up formation. This is the first inside and up formations that I'm seeing right here. Now, the next thing that you want to do when you're back testing is go, why did price move from there? Can anybody tell me why did price move from here? YK, no. If we use zones almost on every time frame, man. It just depends on you, how long you want to be in a trade. So TCamp says there's another inside and up on the left. Okay, this is what I want you to do. Then you right click on this target. Then you're going to go to left extension on, and then you hit OK. Follow this across. Boom. There's more candles here. What is this formation? That's right. Technical analysis doesn't work. This is demand. Okay. And you're right, Chris. This is a retest. Good eyes. I don't know if this is what you saw, but this is a retest because this candle right here also came into there. Now, here's a question since you brought this up. This is a retest. All right. And you do need to find that out. So when I draw the zone, I'm going to show you different ways of drawing the zone. Let's click here, come across, and we are going to encompass. Is that the right word? Encompass? I always say that. I'm like, I don't even know if that's the right word. What we're doing is this is part of the formation. I want you to figure out what candles are part of the formation. 1, 2, 3, 4. Okay. I am drawing from the inside candles. I'm using the wick and I'm using the bottom of this candle here. Basically, using the most anterior or proximal, as I think they say, and distal. Okay, so right there. The lines would look like this, one there and one there, and it would be green. Demand is green. Okay, everybody understand that? So if I go right here and here, and let's take this off, everybody understands where that came from. This is a zone. When Chris says it's a retest of demand, we have tested this zone 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Where do you think demand is, folks, on J&J? So if, poop hits the fan, 126, right? Somewhere in here. All right. Why did price dig so deep in this zone? I mean, you don't really have to, become a scientist about this stuff. Okay? It could be news that pushed it in here, or field orders were already taken here, right? Let's say that an institution put in, I don't know, $1 billion worth of stock right here. Well, price moves quickly. This guy that was told to buy $1 billion of stock only got off $200 million before retail jumped on the gun and then pushed price up to the upside. Okay. It comes back to fill more orders. There was an imbalance of orders. It then shoots back up. Basically, it's accumulating that liquidity, right? So everything that I show you on a smaller time frame is the same idea on a big time frame. They're building liquidity for the bigger move up, and they did it for a long time. Okay? That's the idea or the theory behind this. Regardless of the reason why we dug deeper in here, notice that the zone worked. Now, let me ask you this question. If this wick had come through the zone, what does it mean? What does it mean? Does it really mean anything? What do we do with the candles? You wait for the candle to close. So even if that candle wicked the bottom of that zone, folks, I'm sorry to say, but this is a quarterly candle. And what you will find, and I want you to have the edge on everybody else, is that people will come down here and tell you that this is the end of the world for J&J. And I believe the better approach is to say, I'll let you know at the end of the quarter if you're right. Now, if you want to go to a smaller time frame and try to trade it under 106, then we have ways to do that. We have daily edges, we have PMZs. You see what I'm saying? But I want you to concentrate on the bigger picture. And then once you learn this, I want you to apply it to the time frame that fits your trading style. Okay? So let's keep on moving along. All right? Down and to the left. Any inside and up formations? No, 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 no. Keep going. Now, I want to show you something really quick. What about this right here? Is there an inside and up formation right here? When you are back testing, what I want you to do is I want you to do exactly what I just did. Ask yourself, why did price bounce here? Circle it, okay? Circle it. Now I want you to go to a smaller candle, okay, which is going to be the month. And now I want you to go back to that circle and see if you can find it. This is the part where you need to be advanced on going through and understanding that they are transformers, right? Anybody watch Transformers when they were younger, right? There is an inside and up formation there. This is a inside and up formation. The zone would look like this right here. Use this wick. Use the bottom of this candle. And you could see that price moved up, ran out of buyers, came into demand. So the answer is yes, but on a smaller time frame. Okay? Let's take this off. Let's go back to the quarterly. What if we couldn't find it on the monthly? Where do you think it is? On the weekly. If it's not on the weekly, go to the 2-day, go to the daily, go to the 4-hour. You see how that works? So when big events happen in the market, you're quickly moving and finding these zones. All right. So once again, there is a zone here. The zone, or inside and up, is on the monthly. Okay. Did it work? Did the zone work, guys? It worked. Okay. This zone worked. This zone worked. Let's keep moving. This is a zone. Notice that price has not come down to this zone. But what can we do with this zone, folks? What can we do with this zone? What can we do with this zone? If you were trading with me and we were back in 2011 and we knew everything we knew today, what could we do with this zone? We could leave it on the chart for future for an event that would absolutely crush J&J. I'm looking for the answer. Yep, go long. The same thing that just happened with J&J 2 weeks ago. We are front running a zone. We are anticipating a zone. Why am I anticipating that this can move up? This is going to be your bonus question right now. Why do I think that this is going to move up? What suggests that I think this might actually work this time? Okay, you guys are, I'm starting to see lower wicks. I like the idea of the lower wicks. Where are those wicks going into? See, I'm trying to see if you guys are following along from the very get go of this conversation. Why? What are we looking for to see if this is actually or could it move out? What does it have to do? It has to come into demand somewhere, right? So TCAM said demand. How do we check to see if it came into demand? You see what I'm saying? Keep going with your eyes down and to the left. Boom. Right here. Let's draw some lines, folks. And actually, this zone is huge. Okay? Check this out. I can't make this stuff up. Inside and up formation. Price moves out, comes back, works. Price goes up, comes down, works. Price goes sideways. Now it starts to go inside and up after 1, 2, 3 quarters inside and finally starts to break. Are you guys having like any kind of aha moment here? Seriously. Are you starting to understand what we're seeing? When you take this information and now, how do you take this and get your mind set? Every time frame it's fractal. This whole thing is fractal, meaning you can do it across almost every time frame. Okay? The only thing that changes is your mindset. That's it. Can you change your your can you change your mindset? Can you? So if you were taking this trade right here, what is the first thing that you think? On a quarterly chart, what is the first thing that you guys think? This is what I want you guys to digest here. Yeah. But your expectation to me, and this is not, again, guys, this you can kind of take this information and you can turn it into whatever you feel would work the best for you. Okay. But the expectation is it should take a quarter for me to be right. Do you see what I'm saying? 3 months. That's the first thing you should be saying to yourself. So, in my seat, folks, when I'm trading this kind of stuff, it is natural that some of our traders in here are going to say something like, I don't know, John. I don't think this is going to work. Or, hey, John, did you see the news? Hey, John, did you know X, Y, and Z? Hey, John, did you know that the RSI says this? Hey, John, did you see the squeeze? Hey, John, I don't care about any of that. Let that sink in. All I care about, did it come into a zone? How long is it taking? What is my expectations? What is my risk for this trade? Execute. Go home at night. Am I okay with my risk? If you're sweating every night, you're pissed off, and it's not even been a month, you signed up for the wrong trade. That's it. You signed up for the wrong trade, man. That doesn't mean that you should stop trading. It just means that you should probably find these levels and then go to smaller time frames and start to trade things that are a little bit smaller. Okay, let's keep going. This is 2009, folks. What happened in 2008, 2009? Who cares? The zone worked. Let's go left again, folks. You can see right here, we have inside and up formations. And this is a double inside. This is actually inside and inside. It fails. This is an inside and up right here. Okay, right there. You guys see that? It came into a zone. It broke that zone. But where did the quarterly candle close? Where did it close? It closed above. Now, you tell me since 2023 all the way to 2009, folks, okay, just right there, does it work? So far, it does. Let's keep going back. Let's go to the left. As a matter of fact, if we keep looking left, this is the zone. Boom, right there. Let me go ahead and circle it for you. I actually thought for some reason, I thought 2008, 2009 was the end. So right here, okay, inside, right here, there's your zone. This is your combination right here. Now, when I first started doing this, I want to point out something really quick. If you're following your eyes, okay, right here, you'd go, hey, this is an initial candle. This is an inside candle. That's an up candle. Am I right? And that's okay, guys. If you want to do that, that's fine. But it to me, an inside and up, the better look is like this, a bigger move up or something like this. See how strong this is? We're looking for stronger zones, but to be fair, let's go ahead and just circle or do this inside and up. Boom. It still worked. Okay. There you go. This zone worked over and over and over. All right, folks. Inside and up formation. Boom. Let's take the combination here. Let's go across and right there. And I forgot this little wick right there. Boom. It worked. One more thing. This is the conservative approach. I should say, sorry, this is aggressive approach because I'm using the entire formation. Okay. Some people refine them and they, find a zone here or they'll go underneath the body. The only issue that I have with that is a lot of times price will turn on you before it gets there. And this kind of stuff will happen. And you're going to miss the biggest move of your life. I much rather would have a process around this. Remember what I told you guys. You could come in here with a Fibonacci and just find the 25, 75, 25, 50, and 75 within the zone and use those as levels within the zone. Okay. All right, guys, we are getting back to 1994. Okay. Notice that we don't have any price action that came back to $10 right here. But let's go down here. We can see that we had an inside and up formation in 1990. And that is your zone. Guys, this is what I mean by going back since the inception of the market and seeing the results. This is just the quarterly, and I want you to understand the higher the zones, the higher time frame the zones, the stronger they are. Does everybody understand this? Not all zones are created equal. I started with the higher time frame so that you can understand the bigger picture. Okay? This is just using demand zones. Okay? We could go through here, we could find supply zones, and then I could show you why price stalled where it did. All right? It's the same concept. Same exact concept. Now, in a bull market, though, what you'll find, for example, and I'll just show you one little thing here, is like, for example, let's see if we can find it inside and down in this bad boy. Right here. This is an inside and down. This is the formation. So this is the hard part about shorting. All right, everybody still here? You guys still concentrating? You looking? This is an inside and down formation. Do you guys see that? Yes or no? This is an inside and down. Okay. Price wrapped around. It started to move up. It hit supply. You got a topping wick and price moved down. Okay, cool. It worked. Notice that price comes in again. It dropped. Price comes in. It dropped. So is this supply zone working? Yes. Did the supply zone work here? Yes. It breached. I always think about the big hedge funds or someone that's going short a stock and they announce it on Twitter and people make fun of them. Usually you'll see retail making fun of them because they don't know anything about this type of stuff. And they're like, ha ha ha, so and so is going short again. And, they're looking, this is a quarterly candle. This is where the big guys are. And, price rises and the retail folks are like, ha ha ha, right? But then who's laughing now? You see what I'm saying? Bigger names, the better edge, in my opinion, is waiting for a candle to close while everybody else laughs and speculates, and then you get this kind of move, and these people going big time, shorting in the 70s and getting a move down into 46 are getting paid. Wait for your candles to close, folks. Unless you're not comfortable with your allocation, then I would say don't wait for them to close. It's up to you. Either way, I'm not your financial advisor. But guys, just after this demonstration of showing you J&J going back to the 80s, you can see how powerful this stuff is. Now, the trendy levels, right? The edges are identifying playing fields of demand and supply. Okay. And you can go back, and the cool thing is, if you have these on your chart, you can see why they're powerful. Okay. Why they're powerful. Why they're powerful. I did this because I cannot go to every chart and figure this out with you. I can show you how to do it. Okay. But we have trendy edges for every time frame. These trendy edges help to find the playing field. For example, if you look at J&J now, you can see that we have an inside and down here on a smaller time frame. Most likely the 2-hour. You got an edge above there. If you go down and notice that we have an inside and up formation right here, guys, right there, you can see that the trendy edge is already there. Okay? All it does, the trendy edge, is locate an area. It is a playing field. It is not exact, because what I've learned over the years is trying to be perfect or exact with my methodology and with the methodologies that I've learned is that it's just a waste of time. Unless you're a scalper. And if you're a scalper, cool. Have at it. Use the smaller levels to scalp. I want to go long off the line in the sand. I want to go long over the PMZ. Okay? The reason why I came up with all of this is because I wanted to make sure as a business, okay, as a business model, that I could help all traders. See what I'm saying? It's all about convenience. That's really all it comes down to, folks. I click here. Now that I've taught you what to look for, this is for daily traders. This is for weekly traders. This is for monthly traders. This is for leap traders or the quarterly. I don't have, I don't like to stay in trades too long. Cool. We got the PMZ. All right. So any questions about any questions about that? I think I did a pretty good job. We go off and I get pretty passionate every once in a while. I can't teach like this every single day. I mean, it's just like I feel like when I do teach, and maybe I'm being biased, um, I should be opening your eyes. I know that the first time that I stepped into the classroom and learned about supply and demand, I was hooked in the first 2 hours. The first 2 hours. I knew right away that everything I had learned was basically based off of what they want you to know as retail traders. That's why I get a kick out of CMT. Is it CMTs? The market technicians, the chart market technicians, right? I don't care. They basically, if they're not using supply and demand, folks, they are using what retail wants to hear. RSI, moving averages, all those type of things. I'm not saying they're wrong, but what I'm saying is this clearly has a edge on it. And then just to finish this demonstration is I want to go back to what our member T Camp said. Just because this works does not mean you will be profitable. 1000%. Because trading is a personal venture. You will be tested over and over and over. You will try to take something that's so simplistic and make it so complex. You will make things harder than what they're supposed to be because that's what we do as humans. You are not a machine. Why do you think people spend the money to try to, create algorithms and or just let somebody else do it for them? Because we're human. You got to mess things up, guys. But I have really tried to dial down the process to be more mechanical than what most people teach you. Mechanical means we break above the PMZ, you go long. You know what your stop is. Are you okay with the stop? We take the trade. Mechanical, price comes down into an edge. You can be aggressive. Aggressive means touch and go. I just made this up. I'm going to add this to my acronyms. TAG. We tag a level. We do a touch and go. That means aggressive means I don't care if the candle closes. I've been taught that this is support until proven otherwise. Do you see what I'm saying, guys? Do you guys understand that? So if it pulls down, I don't care because I'm looking for a bounce. That's aggressive. I say aggressive, but if you already have a bracket order, whether it's equity or options, and you're okay with that risk, I think that's conservative. Aggressive would be, I don't know how much I'm putting on the trade. I don't know what my stop's going to be. All I know is I'm brand new. I came in here. I just want to make a trade, and you take a trade. You don't know what you just did. You're down 5 grand and you got no answers. That's crazy. That's aggressive and crazy, right? So being more conservative, you wait for price to come down. It wicks through the edge. It comes back and closes. Then I take my trade. And potentially it works. But what if it doesn't? It's okay. I've already accepted my risk. PMZ, same approach, guys. Every single line on my chart, same approach. Now, I don't know where some people's levels come from. So I can't say without the due diligence, I don't know if you can apply this to every line on your chart because I don't know where that person came up with it. But you understand supply and demand now, right? You understand the concept of it, so you understand where these levels are. You understand that they are a playing field and they are not exact. So therefore, even if price flushes through them, they could end up going right back up. Okay? It's a playing field. Maybe the reason for the flush is because we weren't exact. Scrooge, let's see. The inside and up, the bottom of the zone is the lowest wick, and the top is the close of the mother bar or the highest wick. So, really quick, that's a great question. All right. So, I'm going to give you different scenarios here. Let's say this is the mother candle. Let's say that this is the wick. Let's say that it does not matter what the color of the inside candles are, just so you understand. Okay. Okay? 3 different ways to do this. Conservative way, we're going to use the high point of this wick. Whoa. And our zone would look this big. Okay? Just imagine that this candle over here is a lot bigger. Okay? That's a big zone, right? And depending on what time frame we're looking at, the risk may or may not be big. Okay? If this was a 2-minute candle, that risk might only be 20 cents. But the next way that some people draw zones, they'll use this wick and the bottom of this wick. Some people will go on the closest base candle of the body and do this. Some people will take the bottom of this base candle and do this. You seeing what I'm saying, Scrooge? Okay? So, when we refine the zones, my only issue with this is that in my experience when I first started learning, okay, I would try to refine them because I didn't want to lose the money that was associated with, sorry, my mouse over here is getting stuck. I didn't want to take a trade where I would lose this much. Does that make sense? So price would do its thing. I was ready for it. And my entry was here. Okay. And price would do this. I can't tell you how many times this has happened to a lot of people. But I'm not saying that this cannot happen. But many, many times this happens. But we have a process. Okay, we have a process. Do you understand that? So I go with the bigger zone. And then what is my process when price gets to this zone? We can scale. Good. You look for reclaim. Good. Scale. Also, TTM squeeze. That is a tool that can help us when price gets to that level or that entry of that zone. Come down here and pay attention, right? Pay attention here. That's for a whole different lesson. Most of you guys already know that. Uh, 1 to 5 minutes for a nice entry. Yep, 1 to 5 minutes. So we're looking for higher yellow bars. So basically what you'll find is when we come into a level, let's go over to that. I don't even know what the ES futures are doing. When we come to a level, we are paying attention down here. If you're going down to a level, you should have red bars on your smaller time frames. When we hit the level, we are looking for yellow bars on the histogram to appear. Okay, 2 bars in, look to go long with a defined stop. Understood? On the upside, if you're looking to go short, you're waiting for a level, not just saying, oh, the market's going up, I think I'll short it today. That's not how that works. Wait for a level. If you don't get to the level, you don't do anything. But let's say that you hit your level. What you'll be noticing on your TTM is that you have trendy blue lines. And then after two dark blue lines, I like to look for the short. Okay? All right, guys. Well, I appreciate you listening to that. I do have a session at 12:30 today, and I have a call at 12. But for the next 2 hours, let's see if we can find some trades. And yes, I did record this, and I will stop it now.